Welcome back to Nuclear News. Uranium miners giving up their recent gains. In the last month, the Sprott Junior Uranium Miners ETF is down 1.6%. The S&P 500 is up 0.57%. Why is that happening? Again, it always goes back to the macro environment. We saw what happened when the Federal Reserve cut interest rates by 50 basis points. The market got all excited because interest rates are the oxygen of the financial system. Junior miners need favorable interest rates. The real estate industry needs favorable interest rates. Every single growth industry needs favorable interest rates, right? So we have BlackRock's Larry Fink warning against overly optimistic Fed rate cuts, cites high embedded inflation, and predicts only one reduction this year. So that is kryptonite for early stage miners and tech companies and everything that needs access to financing. The real estate industry is no different, right? So many industries are suffering with high interest rates, especially small businesses, right? So that's one reason why these assets are giving up gains, right? Berkshire Hathaway's cash fortress tops $300 billion as Buffett sells more stock, freezes buybacks. And so Warren Buffett seems extremely bearish in the short term. Now, there are assets that will pay you passive income, similar to a bond, right? So they'll pay you to wait. Like the Global X Uranium ETF has a yield of 6%. That's better than the 10-year bond. Let's look at the 10-year bond because this is the wrecking ball for financial markets. Look at what the 10-year bond interest rate has done since September. It's literally skyrocketed from 3.6% to 4.4%, right? Again, that is the wrecking ball to financial markets. So only non-capital intensive businesses can really do well. And we've even seen the mega cap tech companies falter, right? Because they're spending a huge amount of capital on artificial intelligence and it's costing them an absolute fortune. And so now they're starting to become capital intensive companies. So before they just had massive profit margins. Now they're just spending hundreds of billions of dollars building out AI infrastructure. So capital might get a little more expensive to them as well. And so they might get less of a premium in the market, right? So that explains the market weakness. We have an election coming up. A lot can change. Inflation can go down. Once the rate of inflation goes down, interest rates will go down. And guess what will skyrocket? All the high quality early stage assets. So all that matters if you're an early stage investor is buying quality on as deep a discount as possible and even stacking passive income if they're paying you passive income like the Global X Uranium ETF is. So are uranium miners high quality assets? Well, all we can do is look at the actual fundamentals for these businesses. Well, this chart says a lot, right? What was one of the bubbles that came completely undone once interest rates truly skyrocketed? The clean energy bubble. Interest rates skyrocketed at the end of 2021, right? So in light blue, we see total assets in clean energy ETFs just falling like a brick since interest rates skyrocketed, just puncturing bubbles as capital got more expensive, right? What has actually increased since then? The assets in nuclear ETFs. Why is that? Because the world is waking up to the fact that nuclear is the future. We cover it all the time on this show. So in dark blue, you see assets in nuclear ETFs climbing, about to skyrocket, and in light blue, clean energy ETFs falling off a cliff. So that just speaks to where we are headed in the space. And so let's look at what some prominent figureheads are saying, right? We should definitely increase nuclear power. It's a no-brainer, says Elon Musk. If Trump wins, Elon Musk is going to be part of that administration. That's going to be massive for the nuclear space. Kamala Harris, advanced nuclear built in America by Americans. She wants it as well, right? Nuclear is the greatest source of energy, says JD Vance, right? So the future potential leaders of this country, massively bullish. The present leaders are already incredibly bullish, pushing billions and billions of dollars into this space. What about in China, right? Over the next 26 months, China alone plans to connect 12 reactors, including one SMR, to their grid. What does this mean to the future demand of nuclear and the future demand of the uranium these miners are producing, right? An average of one new nuclear connection every 2.15 months, right? So we have one of the biggest countries on the planet about to onboard 26 new reactors in the next 2 years, just skyrocketing demand. We know the supply of uranium is in a multi-decade supply crunch, so this is just going to accelerate the demand. and shrink the above ground supply even faster. And then we have the shipping giant, ABS, evaluating the impact of nuclear reactor on their liquid natural gas carrier. So nuclear is eating the world. It's going to be the primary energy source on planet Earth in the future. It's all going to run on uranium. And so the fundamentals just keep getting better and better and better for the space. That's why whenever interest rates dip a little bit, these assets skyrocket. So the market's just waking up to it. It's like a ball being held underwater, right? The fundamentals just keep getting better and better for these assets.